All right, y'all, back to work. No, we're not done just yet. We got one more big day to finish up what has been a fantastic final week of January. And I must say, too, it sounds like a lot of you guys are making money this week with this stuff. So really well done. Now, let's buckle up. Let's get serious because we got one more big day left. Let's not give back all these gains. And we're going to probably see a powder keg of volatility tomorrow. We have big inflation numbers tomorrow. We have end of the month, end of the week tomorrow. And you know Trump is talking tariffs right now. We got that tariff deadline on Saturday morning. So now I'll tell you, volatility, do this the wrong way and volatility will cost you money. Do it the right way and the tariff talk, the volatility comes with it. We can make some bank to finish up the week this week. So I have a number of tariff trade ideas I'm going to talk about tonight on this video. As always, I want to make sure everyone has a game plan to make some money to finish up what has been a fantastic final couple of days of the month of January. So enough of the intro. Charts look pretty good right now. Let's jump right in and find some winners for tomorrow. S&P SPY is all ready to go. Nasdaq triple Qs are all ready to go. I've got 4 clues on these charts right now that are telling us where I think the winning trades are waiting for us tomorrow. One of those big clues is right here on the hourly chart. You'll notice right now we're kind of slowly grinding higher right now on the hourly chart on the S&P SPY, slowly grinding higher right now on the Nasdaq triple Qs. Now, until we can get some real liftoff here and start looking for pullbacks, right? Until we can get some liftoff and look for pullbacks here, I would imagine right now the smart money, the big money right now is looking for entries as low as they can. So not a lot has changed since last night's video. I still have my eyes on all these key levels here. The smart money right now is trying to buy those dips underneath those swings on the hourly chart. And that's one clue. I have 3 probably more important clues here on some faster time frames, some tick charts. Help us time the entries, help us deal with volatility for tomorrow. One of those clues here too is in the schedule for tomorrow. Boy, what a powder keg. There are 4 things on my mind for tomorrow. First things first, the biggest news of the morning tomorrow is that personal income number at 8:30, Chicago PMI at 9:45. That personal income number is by far one of the biggest news reports of the week. Be ready for that. We also know that the tariff negotiations are ongoing next 24 hours. That is probably the biggest known unknown for the next 24 hours. And I do expect that to be some market catalysts for tomorrow. And on top of that, we have the end of the week, the end of the month. Remember, traders do things they wouldn't normally do as the week and the month comes to an end. Scarcity plays into the markets and we get a lot more volatility. So personal income, Chicago PMI, tariff talk from Trump the next 24 hours. And again, end of month volatility. This could be a freaking crazy volatility we see here the next 24 hours. And again, do it the right way, we can make some money off volatility. Do it the wrong way, and we'll get caught on the wrong side of it. We'll talk about that more as we go deeper here into the video. I promised 4 clues though, right? So one clue was the hourly. Second clue was the news schedule. Third and fourth clues right now. Let's now drill down to some tick charts right now. Tick charts are fantastic for pattern recognition. By the way, all the time frames you'll see me using tonight in the upper left-hand corner. And if you're watching for the first time right now, that yellow line is the only indicator you need to find winning trades, the 21 EMA. There are 2 more clues here on this tick chart. The most important clue, I think, is this bullish trading range, right? That bull run up into a range. Remember, ranges love to rotate. We're rotating off that low and trying to go higher. Look back over here, right? Look back over there. Range, bull range up. We go up, rotate down. The amount above, the amount below, the amount below, the amount above. If there's one thing you learn about ranges, it's they love to rotate. We saw a great example of that this morning, the trade room, and we get a range going on right now. Bull move up, range rotating off that high. The second big clue here is also pretty important. It goes along with that 60-minute time frame we saw a few moments ago, this lazy bull channel. Now, in my video classes, we talk about these lazy bull channels. Usually lazy bull channels, all the smart money is waiting below all these prior swings. That goes right hand in hand we're seeing on the hourly chart. So let's put all these clues together here for tomorrow with that bull range right now. You know these buyers are trying to rotate higher, punch their ticket, fill that gap fill left over from Sunday night. So I want to talk about that a bit later on, because there are going to be probably 4 different trades we'll talk about if we do punch this thing out and go higher for the gap fill. But again, remember the hourly chart. Look at the lazy channel. The smart money is probably looking for entries below all of these lows. My favorite spot is that 56.5 level. Now, the hard part right now is that I want to get some bear traps down here. I'd love to get some bear traps down here. But remember, volatility is expected to kick into high gear with tariff talks next 24 hours here. So I want to cover a couple different bear trap variations so you don't get caught off guard and force entries in some really volatile times. For example, right? I would love to get down into this area. I would love to trap in some bears down here. Let them try once. Let them try twice. Why twice? Because then I know where their pain is, right? Then I know where their stops are, and I can squeeze those stops running higher. If you're caught short and you get stopped out, you get to buy your way out. And then, of course, as always, once I get that squeeze going higher, I want to add to my winners. And to do that, I want to buy as low as I can, and we'll try to buy underneath prior swings. So one very easy bear trap I would look for here is going to be simply trapping in the bears, because we can all see, right? That's a horrible spot to be selling down there. You would not want to sell at that area, not with that overall bullishness on the hourly, not with that range above us acting as a magnet, not with that lazy bull channel. That's a great spot for a bear trap. And remember, if you want to make more money, add to your winners, try to get as low as you can, look for that higher high in price, and we'll get right in below those lows. Targets are obviously at this point back to retest the high, up to fill that gap. That's one bear trap I would love. But let's kick this up a couple more notches though, right? Because it may get really wild with tariff talks tomorrow into the weekend, right, into the month. So for example, oftentimes we'll see a really strong shot lower here, but we don't get that chance to trap those bears in and squeeze back up again. And it just V bottoms off that low, okay? These can be very challenging if you're not prepared. Here's a trick to these. If it V bottoms off that low, start looking for a new bull channel. It'll almost always begin to grind up like that. Now watch this. Draw a trend line off those highs. Bring that trend line down off that low. The magic happens on the first pullback off that channel. Ideally, I want to be underneath one of these prior swings. That is usually where the money is made on those V bottoms. So again, if it really gets wild out there and just whoop off that low, again, expecting increase in volatility, the hardest part about these is not chasing after it. That voice in your head is going to be telling you to chase after this thing going higher. Your patience will be rewarded on that first test is the best test off that low. And remember, after that bounce off that low, keep on adding to that winner by jumping in under all of these prior swings. So first test, the best test, jumping in below prior swings. These V bottoms can be very, very easy money if you are prepared. Now, let's talk about another volatile situation here right now, because if it really makes a very aggressive run lower here, you have to remember that they're going to try to retest that low before we make that run going higher, okay? So if it really, really crushes going lower, I'm going to make a small adjustment on this and look for what is ultimately a bear trap. I call these crown reversal patterns. If it really races lower, I'm going to trap the bears in once, twice, and now instead of buying up here, okay, I want to buy underneath that low right there. Now, why? Because again, if it really crushes running lower, if Trump says something right provocative, which he loves to do, and it really crushes lower, it's going to want to pop up, retest, and then go back up. I do not want to be buying too high in that scenario. So this is where volatility, be prepared for this. I want to be in as low as I can. I want to be out of that first target. I want to have that stop moved up to point of entry. That way, hopefully we keep going, right? And we're fine. But that way, if it holds the underbelly of one of these areas and runs back down again, at least we have our first target. We've made some money. We've removed the risk on that. Now, I want to talk about one of my favorite trades in highly volatile scenarios is a retest trade. The retest trade in these scenarios could be the biggest winner of the week. We'll talk about that in a moment. Let's slow down for a few moments though, because I know most of you guys watching right now, you know these patterns already. I get so many emails, you guys making money with this. I know you guys know this already. But if you're here for the first time, if you're watching for the first time right now, this might be way over your head. What the heck is this guy talking about? Traps, failures, V-bottoms. I get it. I do look at things a bit differently here on these YouTube videos. So what I'll do is I teach the entire system. In fact, I have a ton of examples of all the entry patterns we're talking about in this video tonight. I cover so much more detail. I have so much more I want to share with you. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a whole lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it is 110% free for you. And keep in mind too, folks, I'm going to put a bunch of extra links in the description of the YouTube video. Start first with the free video course, especially if you're here watching for the first time tonight. Most people start making money on their own just by the information I share in that free video course. And keep in mind too, I post a lot of updates, charts, and videos and mindset stuff on Twitter or X throughout the day. If you're on Twitter X, give me a follow. Again, all kinds of stuff I post in the day in between these YouTube videos. All the details you'll need to learn more and hopefully earn a lot more be linked up for in the description of the YouTube video. So where did we leave off? Right, I talked about if we crush going lower, the key will be getting in as low as I possibly can, right? As low as I possibly can, because as we go higher, remember, with all that momentum going lower, even though we're overall bullish, the bears will try to retest that low. And I want to be at least in the green on that before the threat of that rolling back over. Now, oftentimes what happens is we hold the underbelly, we go right back and take out that low. Now, this will feel like a reversal. I'm warning you right now. This will be a very scary trade, but do not let fear run your trading. Do not let fear run your trading. Here's why. Anybody who sells on that pullback, where's their profit targets? What do you think the profit targets is? It's down at these lows. So sellers up here become buyers down here. Is this a good place to sell? Please say no. Please say no. This is the last place you want to sell. You want to sell? Sell high, right? Sell high. Okay, so that voice in your head is going to say scary, 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 but this is a gift to the buyers right now. Now we're buying nice and low in an overall bull market. Now, how do you time the entry? You time the entry with a bear trap. My favorite way to trade these is let those bears come in once, let them come in twice, let's squeeze those stops, right? Run those stops and then add to your winner. Remember, when I say add to your winner, this is the pattern you want. You want that separation off the moving average. That's the key. Separation off moving average, higher high in price, right below that low, and bam, right? That is a fantastic place to add to your winner. These double bottom retests, again, it's double bottom, it's a retest trade. We call these retest trades in our trade room. It's a 2-try failure, 1-2. I don't need to be as cautious. The initial move down, I want to buy as low as I can because I got to be careful of that retest. But on the retest trade now I got you, right? Now I know where that bottom is. Now I've got sellers taking profit and becoming buyers down here. This is a lot more aggressive situation buying that retest. So now I can buy a failure pattern. We call these in our free video classes, 2-try failure, add on with that bear trap, keep adding to that winner, right, and running back up again. One more variation of this And then we'll talk about the Nasdaq going higher here, right? So we'll cover more of this, of course, as we go deeper here into this video. What if we don't get that big move down, right? I mean, come on, we're overall bullish. There's a gap just begging to get filled right there. There's no guarantee we go lower here or that much lower. What if we roll a bit lower here and then try to go higher? Well, what's the problem? The problem is I'm buying relatively high, right? Relatively speaking. So how do we solve that problem? We solve that problem by buying as low as we can. This is a very easy one. Higher high in price, right below that low. This is a technical bear trap like I teach inside the free video course. What I really want here is I want to see it bounce off that low, get a shallow pullback, just a little miss of that moving average. I cannot emphasize that separation enough. The separation is strength. That's the giveaway on these little shallow pullbacks. Higher high in price, and we're looking for longs right below that low. Target, of course, now is that gap fill. Not my favorite trade for tomorrow, but I don't control these markets. I have to take whatever we get. So shallow pullbacks, buy as low as we possibly can. Deeper pullbacks, trap the bears in, squeeze those stops. Now, in a moment, we'll go to the Nasdaq and talk about if this thing takes flight. I've got 4 trades I'm watching as we go higher. I have one more thing, though, I want to talk about for tomorrow, and it's regarding a range. Let's just speculate right now. Something happens overnight, we crush lower, and we go into a trading range down here. If we crush lower and get stuck in a range, ranges act like magnets, and they love to rotate. The amount below, the amount above, the amount below, the amount above. We saw one right here, right? Look, the amount above, the amount below, the amount below, the amount above. They love to rotate back and forth with ranges. Now, why do I bring this up? Because if we go sideways in a range down here and we shoot lower on this, it's an overall bull market with a bearish range. Is this a good place to sell? No, you do not want to sell down here. The key here is trap those bears in once, twice, same thing. 2 tries, squeeze those stops, add to your winner. Now, this may seem like your ordinary failure pattern into trap, but remember, we're an overall bull market. So now as we rotate off of that low now we know where the market wants to go. Promise me, if we get this trade tomorrow, do not take your full trade position off at that pendulum. You better leave that runner, right? Because oftentimes these will slingshot off that low because again, we're an overall bull market and ranges love to rotate. If the trading gods are watching down on me tonight, that is the trade I want for tomorrow. A bear trap below it. And again, it rotates off that low. Because we're so bullish overall, though, it slingshots and crushes running higher. Boy, I'm getting goosebumps just talking about this stuff here. All right, let's talk Nasdaq right now. Nasdaq, you notice here, Nasdaq is very similar, but a little bit different on this Nasdaq. Once again, you'll notice we're kind of grinding up here right now, grinding up. Like I mentioned earlier, below these lows. You would think that is where the smart money is looking for tomorrow until we get a big crush going higher and then start looking for basically breakout pullbacks off this range. Now, before we dive into the tick chart in the Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing because YouTube rewards me every time you like, share, and subscribe on this channel. I know we're all busy people these days. I know it's the end of the month right now. I appreciate you spending a few minutes with me here every evening on these YouTube videos. So thank you so much for the likes, subscribes, and all the ongoing support. Now, let's roll sleeves up and dive in and talk about the Nasdaq here. Remember, we don't trade off time charts. Time charts make everything more difficult. I like to use the hourly chart for the big picture, but the tick charts, right? A 4,000 tick chart here on the Nasdaq. Now you'll notice we have a bit of a different scenario here. It's similar, but it's very different here on the Nasdaq. This is a tough one, right? Range there, range there, range there, range there. When you have all these ranges, that usually means it's just one big range, right? One big range, lower highs, higher lows. Now that triangle, okay, that triangle is a really, really big clue because whenever we see a triangle range like this, it tells us the money is made around the edges, right? Around the edges. If I had to guess right now, I would guess around these edges. Sellers up here, buyers down here. Now, we're an overall bull market, right? So we have to assume now the smart money is going to use that same volatility game plan we talked about earlier on the S&P, right? So same stuff earlier mentioned on the S&P, right? We get that run down. It's that bear trap. Add to those winners, right? Again, I'm not going to go the whole thing again right now because you can go back and watch the S&P and apply it. Literally every single step of the S&P analysis can be applied on the Nasdaq. The V bottom, right? The boing, the V bottom off the low, find that channel, right? And of course, and also too, right? If we really crush going lower, it's that buying as low as we can, running up, being aware of that retest trade, trapping in again, and whoop, right back up, same game plan. And if we're lucky, it'll be a bit complicated at first, right? But you get a game plan. If we're lucky, crush lower, chop around in a range, and slingshot, right? Slingshot right up off of that low. My goodness, that would be a fantastic trade for tomorrow. So again, go back and watch the S&P if you want, and the same stuff happens here on the Nasdaq as well. Now, as we go higher here, right now, going higher, we need to clear that range, right? It's an overall bull market, right? So I'm not going to try to short this thing off the high. It might work, but the odds are not there. We have to play the numbers, okay? So even though I would love the idea and have some magic indicator I could short the high, it doesn't exist, right? There isn't a consistent, reliable way to short this thing off the high right now. We're just too bullish on the hourly chart. But know that is a key area of resistance. Now, that gap fill is begging to get filled this weekend. Again, the game plan's ready if we go lower. If we go higher here, I want you to memorize this pattern setup, okay? This is the key here. I want to see this first breakout start to separate off the moving average. Look back over here. Look back over there. They popped up there. They couldn't get that separation. Okay, that's no separation right there. Okay, so if we pop up here right now, the giveaway for a good breakout is going to be that separation. Okay, it's going to be this. I can almost guarantee it. Okay, that's the breakout you want, or that's the proof you want, right? As we go higher, get that separation. It will not stick around that 21 EMA. All right, it'll separate and barely pull back. Okay, now that's one big clue. When that happens, the aggressive buyers now are going to start jumping in on that low right there. Right? Again, this is a technical bear trap entry. I teach these in the free video course, right? It's just like this one right here. Right? Up, pull back, going higher high, buying out the low. Okay, now remember, whenever we break out of a range, whenever we have a range breakout, the breakout leg is the measuring leg. Okay? Now, if you want to make more money, get better at holding on to your winners. So knowing where that breakout leg is, that's our target. I don't know exactly where it'll be right now, but that is the formula to find that target, okay? So bear traps, buying low as we separate off the moving average. Now, this trading range now becomes a breakout pullback for us. When I think about breakout pullbacks, I always think about a two-legged pullback, right? A two-legged pullback. One leg, two leg. Think about a measured move. We go up, one leg, two leg. Think about a measured move, okay? That will give you the general area. And hopefully it's around one of these prior highs, all right? That's the formula. Now, as always, I'm not gonna pick a bottom on this. We don't pick tops and bottoms. It may roll over. I don't know. What I do know, though, is with all that momentum going higher and that range support, this is the last place you want to be selling. I can almost guarantee you, though, lots of rookies who haven't paid their tuition in these markets yet, they're not going to know that, right? So trap the bears in once and twice. I like two tries because I want to squeeze your stops. I'm going to squeeze those stops. That's the catalyst that makes it easier to make consistent money. As it runs higher, the market wants to go back and take out that recent high. Your job right now is to watch for that moving average coming up, that shallow pullback, and adding to your winners. Again, do not let fear run your trading, right? Do your job and add to that winner. Your job literally is to add to that winner. That is your job as a trader. So it's a failure pattern, a bear trap, into an add-on back to retest the high. All right, and hopefully it's up around that gap fill at some point tomorrow. That is a classic breakout pullback, right? It's a bear trap on the way up. It's a Two-legged move, measured move. It's a two try, right? Measured move back, two-legged pullback. It's a bear trap. Add more in and retest it. Memorize that pattern. Happens over and over again in any market you want to apply it to. Now, remember, a lot of times what happens is when these things break out, they don't give us, what happens oftentimes is they'll break out and start grinding. Remember, when there's a gap up there, there could be a ton of FOMO that kicks in right here, right? So we may not get that pullback at all. It may grind up. If it grinds up, remember, grinding markets are like freight trains, right? They're like steamrollers. When markets grind up like that, they're very, very difficult to get to pull back. So draw a trend off the highs, bringing off that low now. This pullback, this first test off this low is about as close to a guaranteed winner I can show you here on YouTube. Because again, when it pops and grinds up like that, it's like a steamroller, right? It's so much momentum, it drags all the moving averages higher on the chart, right? And so everybody wants that first pullback. Now, very important, where is the target on this? It's easy, the pop leg. Okay, the pop leg, remember the first leg, the breakout leg is always the measuring leg. In this scenario, it's the pop leg. Okay, the pop leg is the measuring leg. Pin that right there. That gives you now your measured leg. Does that make sense? A little bit different calculation, but same basic idea. Okay, one more. Okay, one more. Let's say now we pop up into a range up here. Okay, this again, remember ranges are the easiest ones to make money with. When I have a range up here, remember this range, breakout pullback, right? Breakout pullback. The new range, magnet, pendulum swing, okay? That's the formula you want to think about. And the way we do it is we simply know now, wait for that pullback, get somewhere around these prior support levels. Don't pick that bottom. Wait for the pullback to that 21 EMA. 1, 2, squeeze those stops, right? Buy right into the stops there, target their pain, right? Think about it. If you're a bear right there, where's your pain, right? Where are you throwing that keyboard? Where is your pain on that trade? Buy right into those stops and run that pain. Then add more. And remember, when a range is in play, we don't just pull the plug at the high of day right there. No, we let the trade run. This is why ranges are most lucrative, because now you know where that thing wants to go. Leave that runner, okay? And remember, right, we saw today, if you find yourself in a range and we go up first and down second, what do? You mark off the high, you mark off that low. That's your spot, right? That's your spot. Trap those bears in, squeeze them, add more. See that right there? Trap those bears in, squeeze them, add more right there. I'm sorry, I'm a bit sloppy on this one, but that, right? Failure, trap, add on. It's that fake out, breakout off the high here. We go up, right? We go up into a trading range. We break out higher. We slam back lower, the amount above, the amount below. That creates your level. Trap those bears in. Same idea, right? I'll tell you right now, that area, that will feel like a reversal, right? That will feel like a reversal. When it rotates off that high like that, that is a scary trade. But guess what? The best entries are almost always scary. Same thing over here, right? That will feel very scary. But again, once you know how ranges work, trade that rotation. All right, guys, those are my favorite trades setting up for what should be a very busy Friday morning. Now, don't forget, speaking tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money out there is to come out and learn with me, trade with me every morning at the opening bell. Again, I'm going to put all the important links you'll need, the description of the YouTube video. Start first with the free video classes. Enjoy all those trade examples. Everyone loves the free video class. Then come join me in my trade room and we'll do it together. In the meantime, be well out there. Make some money for me tomorrow morning. And as always, be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.